What's going on, everybody? It's Joe Giunta with Trend Trading Academy. I'm here to help you trade and get paid. In today's video, I'm going to bring you the most powerful supply and demand video that you've ever seen. Trust me, it is the most powerful thing you're going to see on supply and demand on all of YouTube. Because not only am I going to tell you what is supply and demand, break it down for you, but I'm going to show you how it plays out on the chart and how to get low risk, high reward trade setups from simple supply and demand. No indicators, no fibs, nothing fancy, just simple trading. Low risk, high reward, things going in our favor, and we're gonna get these big time trades from supply and demand. So if this video brings you value, go ahead and hit that like button, comment, and subscribe. If you want to become a student, go to trendtrading.academy. Become a student today. Live classes, trade setups, all kinds of value. You definitely don't want to miss out on being part of our trading community. So go to trendtrading.academy and join us today. For now, I'll see you on the charts.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trading get paid, trading get paid, trading get paid, trading get paid.
All right, guys, let's jump right into it. We're going to talk about supply and demand and how to mark up these zones so that we can catch perfect entries without bias. We're not going to really, have a certain one direction bias, but I'm going to show you today how to use supply and demand to find great entries, either breakout or retest, and have great low risk, high reward trades in the market. All right, so let's talk about supply and demand. What is supply and demand? Supply is the amount of product, and this is any market, real estate, gold, crypto, Forex, whatever market there is, hats, peanut butter, anything that's out there. We saw it, during COVID with toilet paper, and even right now we're seeing it in wood. The price of wood has gone up because the demand is high and the supply is low. So anytime you have low supply and high demand, price goes up. Anytime you have high supply and low demand, price comes down. So what is it? Supply is the amount of a product that is available, while demand is how many buyers there are in the market for said product. So supply is how much we have. Demand is how many people want it. The more supply of something that there is, its price goes down, causing demand in the market because it costs less. Once there is too much of a demand for a product, it will use up the supply because why? More people want it, therefore causing the cycle of supply and demand. So therefore, what we're really saying is the more supply of something there is, the more, it's easy to get. Everybody has some, right? If there's a million of something, everybody has it. If there's a low supply, then there's only a few of them. Maybe they're harder to get. The other side of it is maybe there's not a lot of people who want something, or maybe there's a lot of people who do want it. Okay? So think about this. The supply for, let's say a cheaper low-end car, maybe an entry-level Ford or, something like that. They're printing those things out, like paper, They're running those things through an assembly line. I've actually been to the Ford plant and seen it myself. They're busting those things out. It's taking less than a couple hours, I think, to make a Ford, as far as their whole assembly line. They're making hundreds of thousands of these things. And that's why, you can buy one pretty regularly. Any Ford lot that you go to or any Ford dealership that you go to will have one. Now, a Bugatti, if you look at a Bugatti, they're not pumping them out by the 100,000. There are certain models of a Bugatti that maybe they might make 6 of them, or 8 or 10 or 16 of them total. So you may only have one of 16 or 17, cars that are even available. So with a Ford that you can just go anywhere and buy one, well, there's a lot of supply. So maybe they might cost 15, 20, 25, 30, depending on what, model that you want. Maybe it's a $30,000 car. You go and you get a Bugatti, which is, maybe only 16 or 20 of them made of a certain model. And, now you're looking at spending hundreds of thousands of dollars for one vehicle. Well, why? Because there's only a few of them there, and they're easily going to be able to sell whatever it is that they have. Their supply is valuable because it's limited. Okay? So the more supply there is, the easier it becomes to gain access to. Therefore, it's a little cheaper. However, there is a cycle here that happens. And what happens here is now suddenly that the price is low, more people start buying it because, of course, it's cheap, it's low priced, and people are getting good deals. Well, the more demand there comes for something because now it costs less, well, guess what? More people start buying it and eating up that supply or using up that supply. So now there's less of them. So now guess what happens? The price goes up because there's less available. And now, because the price goes up, less people can afford it, so the demand comes down. And so on and so forth. We see this cycle of supply and demand. Now, when we trade that on a chart, there are 4 ways that we see that in Forex. And I'm going to show you what those are. The first recognition is called rally base rally. And what that means is this type of a pattern occurs in a bull market, and it happens when the price of a Forex pair is going to continue to rise. This happens due to several reasons. One, banks gathering extra supply that they receive during once they have definitive bullish direction. So essentially, the price goes up. Maybe there's some indecision, and once they see that price is going to continue up, the bank buys whatever they can and pushes the price up before price goes up. They do this so that they have the most supply available once price is high, so that they can sell the most possible at the highest price. The next one we have is drop base drop. This occurs in a bear market and happens when the price of a Forex pair will continue to fall. This happens due to banks gathering more funds, not supply, but funding, before selling off their supply to the lowest price. So essentially what they want to do is they want to gather money, because once price goes to the bottom, they want to be able to buy as much as they can. So what they do is they manipulate the market, is really what's happening, and they gather more funds, sell it off, and then now it goes to the lowest price. Now they have the most capital, they have all the funding they want once price is at the bottom. They do this so that they can have the most capital available to get the supply when it's at its lowest price. Who wants to buy high? The banks are smart. They get as much money as they can so they can buy at the lowest price. Now here's where it gets a little bit more tricky. Here's you have a rally base drop, okay? And this occurs near the end of an extension in a bull market. So a rally is an up move, a drop is obviously a down move. This occurs in the end of an extension in a bull market and happens when the price of a Forex pair will fall. So this happens due to the banks pushing the price of a currency up so that they can sell their supply at a higher price. This generally is because maybe they have too much supply on hand, and that kind of pushes the price up a little bit, because what happens is they had more than what they anticipated having. So what they do is they actually buy more, push the price up, and then sell it, okay? So it's really manipulation, but it's banks moving money around at these psychological levels. It can also be the result of a last wave of bullish sentiment before the bears taking over the market. So it's not always bank manipulation, it could be that the last bit of the buyers push the price up because they're trying to buy, but then of course the bears take over and the market drops. So this is a rally base drop. Last but not least, we have the opposite, which is a drop base rally. It's the exact same thing, but opposite. So this occurs near the end of an extension in a bear market and happens when the price of a Forex pair will rise. So this happens due to the bank selling off their supply so they can push price of a currency down. So why? So they can gain their supply back at a lower price, right? So it can also be the result of the last wave of a bearish sentiment before the bulls taking over in the market. I'm sorry, the screen here is wrong. It should say bulls. But what happens here is prices dropping. Now they know price is going to rally. It's going to go back up. So what they do is they allow the price to go down. They buy up everything they can at a lower price so that they can push price up. And once price goes up, they can sell at a higher price, because the banks always come back to one thing and one thing only, and that is buy low, sell high. Let's look at it actually on the chart. So now that we understand the definitions of these patterns and how the bank moves money and how it happens, let's look at it actually happening on the chart. So we're going to look at the GBP AUD chart, 15-minute time frame, and we're going to try to quickly go through and show you how to recognize, mark up, and find profitable trades in supply and demand areas. So, all right, so here we are. We're looking at this right here. We got this drop, base, rally. Okay. Now notice here that prior to this, we had a rally, base, drop. However, when you look at it, the risk reward was really not in our favor. So we would pass on that one. We really wouldn't want to take that trade because it really would not be in our favor. So here though, what was a rally base drop, the drop becomes the first wave of the next move. So drop, base, rally. So what do? We grab our box tool. I tell our team all the time, box it up. Once you have the end of your first wave, which is your extension here, this drop, you go to the end of the drop, get your box on it, and you simply box it up. That's it. Just that simple. Drop, box. Okay? Not Dropbox the app. All right? Drop. You box up your base. Once you have a breakout, now mind you, obviously this was some manipulation here. We had some push down, but no big deal. We had a gap here. The gap would be filled, no big deal. Once we have price that pushes up and engulfs, breaks out of your box, meaning that you now have an engulfing candle that it consumes your base. Drop, base, rally. So in this case, once we had the breakout, we would get in to this trade. All right, so you once you have the breakout here of your base box, all right, you could drop this on here like this. You're gonna come back to these wicks right here. That's where you're gonna set your stop loss, just outside of these wicks. You're gonna go back up here to the top of your structure for a profit target, and you have a beautiful risk reward, nearly 1 to 2 risk reward. And look what's happening. It pushes up, goes out, and then starts retesting around here. Okay. So very, very nice. You know you're going to get up to here. You got drop, base, rally. Really nice setup. Very good trade. Now, again, what this could be happening, and this is real time, rally. Now we have another base happening. So it's possible. We don't know yet what's going to happen. But you just come right through here. You box it up. And let's wait to see what happens. Right? So we'll wait on that. Maybe we'll come back and revisit that next week. Okay. But now the other thing you want to do is, we're looking at a 15-minute chart, and there's a lot of information here. So why don't we do this? Sometimes you just want to zoom out a little bit, right? And you can see these happening so frequently. So just to kind of show you what's happening here, it's pretty awesome. Look at what we have here. Rally, base, rally. Beautiful. Rally, base, drop. Beautiful. All right. You have rally, base, rally. Beautiful. Rally, base, drop. Beautiful. Drop, base, rally. Beautiful. Okay. Not every time does it happen. Sometimes you get these, these reversal type patterns right here like that. That's okay. No big deal. All right. But you can look all throughout and you can find these things happening all over. Rally, base, rally. Drop, base, rally. Happens all the time. Right here, smaller. Drop, base, rally. Okay. Really nice setups all the way through. And if you go back, again, I'm looking at the 15-minute chart. You can do this on any time frame. You can go back and see these happen over and over again. Drop, base, rally. Okay? These happen all the time. Rally, base, rally. Over and over again, guys. Over and over again. Drop, base, rally. Over and over again. So the point I'm trying to make here is, here's what you want to do. Anytime, doesn't matter when. Let's just look at this for an example. Just look at this one. You get a rally. You go to the end of your rally. And you simply box it up. Okay, so you go. You box it up. Let's just look at it. Boom, there it is. You box it up. And you wait for the breakout. Rally. Base. Boom. Now you have it engulfing. It breaks out. There you go. Look at your risk reward again. Look at this. Look how beautiful this is. Right? Look at that. Beautiful, beautiful risk reward. Why? Because you are using the bank momentum in your favor and not against you. It happens over and over and over again in the market. It's all the time. Let's examine this one. Rally, base, drop. So what happens? You get a rally. You box it up. Right? Just box it up. No big deal. Rally, base. You get a fake out here. That's okay. I'm not going to tell you you're going to win 100%. If you entered there, you would have got some pips, but you would end up getting faked out. No big deal. First one's a fake out. Second one's a breakout. Rally, base, drop. Okay? And what happens? You end up getting a little fake out, and then you get a beautiful, beautiful drop here. So let's look at what that would have looked like on a short position. And boom, come back to just outside of your thing here. And come down to structure. Beautiful, beautiful setup there. Right? Even if you did take a loss here, you'd have gained way more back right here. Simple supply and demand trading over and over again. We'll look at one more. Rally, base, rally. So what do? We get a rally. Box it up. And we take a breakout. It doesn't matter which direction. We just take the breakout. Rally, base, rally. So we enter here. Let's get that long position. We enter here. Boom. Breakout. Get a big breakout and a nice retest. Come back to structure. Even if you went outside of here. Look at this. That in and of itself is beautiful. And you could have took it all the way up to here, which would have been even better. But just, for the sake of transparency, you could have took it up to here. Probably would have set your stop loss here and not outside because you had a breakout and you had a previous low. So you have really, really nice risk reward. Again, using rally, base, rally. Every time we just simply need to box up the base, take the breakout. Box up the base, take the breakout. That's how you trade supply and demand. All right, guys, there you have it. I hope this video brought you as much value as I think it did. I know it did, because, man, did you see that? Supply and demand. I was talking about the 15-minute chart, just simple stuff here, but looking at how we can box up the base, take the breakout or the retest, whatever, you know, it really depends on how you want to trade it, but you need to determine that ahead of time. Really, that's up to you. But we're letting the market make its move, let the banks make their move. We're boxing up their base so that we know when their gathering is over and when price is going to move in a certain direction. No bias. We don't care which direction it moves. We're just going to take what the banks do and we're going to ride their wave. This is powerful. Apply this to your trading and I'm telling you, you're going to the next level. We do this at TTA on a daily basis, and our students are making money from trading these supply and demand zones. It's super powerful. Now, when we add fibs and we start adding these other, oh man, don't get me started on all that. But just simple, box up the base, take the breakout, make sure that risk reward is proper, you're all set. Powerful, powerful trading tool. So don't forget to like, comment, and subscribe. Let everybody know what you think of these videos. Comment below. Tell me what you think about this. Are you catching these supply and demand breakouts? Hit me with them fire emojis. Whatever you got to do to let me know that this channel is helping you out. I appreciate that. Get your merch, TGP, tradinggetpaid.com. Get a trading journal. We got all kinds of cool stuff happening. But I'm telling you guys, the most important thing is becoming a member of TTA. Just look in the comments. Look in the comments and see what the TTA members are talking about. You'll see it. It's powerful. Powerful. Our students are making money. We're winning together. We're dominating together. I'll see you on the next video.